This is your LMAX exchange technical update for Wednesday, November 1st, 2017. Euro dollar. So the euro is just hanging out and consolidating right now following the break of the neckline of a major head and shoulders top that could open the door for a deeper setback towards what would be a pattern objective around 112.30. At this point, look for rallies to be well capped, while only back above the right shoulder ultimately, which comes in right around the 1880 level, would compromise the current downside pressure in the euro. Sterling dollar. Cable has been bid up in recent trade, but overall it's a lot of chop, and we need to see a daily close above 133.38 or back below 130.27 for clear directional insight. Dollar yen. So dollar yen has shown signs of wanting to top out after stalling out by a range high that has defined this market over the past several months for much of 2017, and we could be in the process of rolling over for a break back towards the range lows all the way down in the 108 area. But right now we need to focus on key levels of resistance and support above and below for clearer insight. Right now below that support is going to come in all the way down at 111.65, and above we would need to see a break above 114.50 to potentially compromise this range outlook. Euro Swiss. Euro Swiss has continued to push higher. Fresh 2017 highs were seen in the previous week, and the market is looking like it wants to continue to extend up towards that next major psychological barrier, a previous base, a very strong one in that, back in January of 2015 at 120 before finally getting broken. We know what happened there. So right now, the market should be supported ahead of that next upside extension and revisiting of that 120 level, while any setback should be supported into the ideally 114 area. Only back below 112.60 would delay this constructive outlook for Euro Swiss. Aussie dollar. So Aussie remains pressured to the downside. The market now is closing in on its next measured move extension, which comes in at 75.50. At this point, the market would need to see a break all the way back above a previous lower top at 79 to take the immediate pressure off the downside. Any rallies we do see here should be very well capped ahead of that level, ideally ahead of 878. Dollar CAD. So dollar CAD continues to extend its impressive recovery. Remember, this is a market that had broken down in 2017 from highs all the way up in the 140 area or close to it, and breaking down just shy of 120. We're now seeing the market retrace this move, and we could see this extend further towards that next key psychological barrier at 130 further up. The market is a little bit extended on the daily chart, so we could see some setbacks, but setbacks ideally now should be very well supported ahead of 125. Kiwi dollar. The New Zealand dollar stalled out just after touching or matching that 2017 low from earlier this year back in May at 68.18. There is risk, though, that the market will now look to establish below that low, and a close below that low at 68.18 that was touched last week would open the door for the next downside extension here towards 65. Any rallies here should be very well capped ahead of 70, with only a break back above 72 to compromise what is now a bearish outlook for Kiwi dollar. SPX 500, well, the story is the same here. The market continues to drive to fresh record highs, and although we've seen some minor setbacks, the market would need to establish a daily close back below 25.44 at a minimum to take the immediate pressure off the top side. Gold. So gold has been choppy, but overall the general direction here has been higher, with the market well supported on some intense dips, but well supported for higher lows and higher highs that have led to a 2017 high back in September all the way up at 1357. Look for the market to once again be supported ideally around 1250 or ahead of 1250 ahead of the next major upside extension to eventually retest and break the 2016 high 1375 further up.